What's up, investors? Welcome back to the channel, Tony's Market Mentor, where we build our wealth one step at a time. Remember, doesn't matter the size of your account, whether it's big or small. Everyone's always asking me, do I need a lot of money to get started? How much money do I need? I don't have enough money to invest. And reality is, you don't need a lot of money. You don't need thousands and thousands of dollars to start. You can start off with 10, 20, 50, or whatever you can afford. All that matters is that you get started. Start investing in your future now. That way, when you're ready to retire, you're all set. But enough of that. If you're here, you're obviously interested in investing, not only in your wealth, but in yourself. It's Sunday, and you know what that means. It's time to learn. So I hope you guys brought your notebook because class is about to start, and today's subject is learning how to properly read candlesticks. So let's dive in. Well, let's get started, guys. Today's roadmap is going to be real simple. First, I'm going to teach you guys how to properly read a candle. Then we're going to move into doji candles. After that, we have our hammer and our inverted hammer. And lastly, we're going to have our hanging man and our shooting star. So here we have a green candle and a red candle. Green candles are bullish because they appreciated for that time period. Red candles are bearish because the price depreciated for that time period. Now, the time period all depends on what we choose to set it on. It could be 1 minute, 5 minutes, a day, whatever we choose. These rectangle areas, either green or red, are known as the bodies of the candle. These thin lines on the top and the bottom are the wicks or the tails. For a green candle, the opening price is at the bottom, the closing price is on top. So that means when the candle first opened, the price was down here and it went up. That's why it turned green. For a red candlestick, the price is on top and the close is at bottom, meaning when it opened, the price was higher and it turned red and closed lower. The wicks on the top of the candles, either red or green, represent the highest point the price went for that time period. The wicks on the bottom represent the lowest point the price went for that time period. So what does the size of a candle tell you? The bigger the candlestick, the greater momentum was gained during that time period. The bigger body shows the price traveled a greater distance during that time. The smaller the candlestick body is, the less momentum is occurring. That means the price traveled a shorter distance during the time of that candle. A doji candle indicates indecision in the market. That typically happens when the opening price is similar to the closing price of an asset, leaving us with a candle with no body that looks similar to a cross. This can often lead to a potential reversal or continuation depending on where the candle is placed. The doji candlestick typically has 4 different patterns. It has the classic doji, has the long leg doji, the dragonfly, or the gravestone. Now let's get into our hammer and inverted hammer candles. A hammer candle typically has a small body on top and a long wick on bottom, either a small wick on top or no wick at all. These typically print on the bottom of a pattern and indicate a bullish reversal or a bullish movement. Similar, the inverted hammer is upside down and has a small body on the bottom with a long wick on top. Again, this normally prints on the bottom of a pattern and indicates either a reversal or a bullish move up. When a hammer or inverted hammer is printed on a downtrend, it signals a potential bullish reversal. It shows that sellers tried to push the price lower, but the buyer stepped in, rejecting the drop. Along with other signals, we pair this to go long. The last two are going to be the hanging man and the shooting star. Identical to the hammer and the inverted hammer, the hanging man has a small body on top with a long wick on bottom. On the other hand, the shooting star is similar to the inverted hammer with a small body on bottom and a long wick on top. What sets these candles apart is simply where they are printed. Both the hanging man and the shooting star indicate a bearish movement or reversal when they are printed after an upward trend. There you have it, guys. We have our candle patterns. So we have our classic patterns, which is our bearish when it's red, bullish when it's green. Then we have our dojis, which print 4 different candles. We have the classic, we have the long leg doji, we have the dragonfly, and we have the gravestone. After that, we have our hammer candle, our inverted hammer, if they are printed after a downward trend, which they typically signify a bullish movement. Then we have our hanging man, we have our shooting star that print typically after an upward trend, which signify a bearish movement. Understanding these candles and what they mean is crucial for a day trader, especially when scalping. After you enter your trade, you want to learn to read each candle individually. That way you can make better decisions. Now, learning to read the candle is one thing, but learning to read the pattern is a whole different game. If you guys are interested in mastering how to properly read candlesticks and candlesticks patterns, I'm going to leave a link to the Discord in the description where I'm going to go in depth on how to properly read patterns and what they mean, whether it's bullish or bearish, whether you should get in or you should get out. If you enjoyed this video and you found it useful, hit the like, subscribe, and notification bell, and we'll catch you next time.